Hello, good morning. Welcome back to what is now the 20th episode of the Better Decisions podcast. My name is David Siddons. I'm your host. And today I'm sitting here with Hugo Garcia. Hugo, thanks for coming in to, I say coming in. I'm here in your office, not the other way around, to do this very interesting episode that we're going to talk about the whole insurance gig in South Florida. A lot of people have been asking me about this podcast before we shot it. A lot of people want to know what's going on. This is kind of a look behind the scenes. And we're going to understand very, very quickly why it is a look behind the scenes. Hugo, thank you again.
My pleasure.
I'd like you to start off, introduce yourself, and then just say exactly what you do. And then we'll kind of get into the questions, of which I have a lot, about the whole insurance gig.
Okay. Well, I was born and raised in Miami-Dade County. Cuban-American trial attorney here in Dade County. Practice across the Florida Keys, Dade County, Broward, Palm Beach, pretty much throughout the state of Florida, in what's called first-party insurance litigation. I've been on both aisles of the I'll call it the ball game here. I've represented both in the insurance companies in these kind of litigation cases, and now in our office now we represent the homeowners and other businesses that own properties, both for investment purposes and rentals, on their side now, against the insurance companies when there's a claim that's been processed and has either been denied, underpaid, or they just don't provide coverage as it is.
Okay, so to be clear, you go up against the insurance companies when they simply don't pay out.
Correct.
Okay, and I'm slowly saying this because the one thing that we notice that when people get into insurance and we hear the horror stories of people who have these policies and then they go there thinking they're fully covered and the insurance company goes, there's a clause here that says we don't have to pay you because you left the back door open, or I don't know, I'm just making something up here, but something along those lines where there's a get out clause.
Yep. It's interesting you make that first emphasis here in the podcast, because recently with Hurricane Ian, there's about 2 or 3 used car dealerships in that area that got impacted, where they contacted insurance to put a claim. Obviously, most of their vehicles that they were selling, both on the lower end or high end vehicles as well, luxury vehicles as well. That when they go to get put the claims to try to recoup the money or whatever the value is on those vehicles, the insurance carrier, the adjuster that works for the insurance company, say, hey, by the way, turn to page 2, turn to page 5, turn to page 58. There's an exclusion, and we cannot provide coverage for those vehicles at this time.
So read your exclusions is really the long. When you get a policy, read your exclusions. Yeah. I mean, who reads their insurance policy? I haven't. I'll be honest with you. I haven't read my insurance policy. And what you've been saying to me off camera, and obviously what we're going to hear about on camera, is going to probably make everyone run to their file cabinet, grab their policy, and look at it very carefully. Now, right now, as we sit here in November, what are we? November the 11th we're on right now? No, November the 11th. And we just had, what we thought was a hurricane maybe coming towards Miami that just kind of nothing really happened. And then obviously we had Hurricane Ian that came through, about a month ago. Even before that, the insurance game is changing and the insurance behavior is changing. And I think right now, having this conversation about the policies in South Florida, and this is even before Ian happened.
Correct.
There's big change afoot. And we're going to go straight into it. And I'm going to ask you, what are the premium changes that we're seeing? And then I want to get into some of the more specifics about, how they're being impacted by some of the current climatic situations that have occurred over the last 12 months, and how those play in, and how they can play in to next year if something happens. Okay.
So to go on, touch directly on that point, for either individuals, entities, investors who are anticipating investing in South Florida and Florida as a state overall, it's very important to look at the COs, the certificate of occupancy, and what is the year on that certificate. In other words, when you go to search your property, the property that you want to purchase or invest in, and you typically go online to the property appraiser's office to see whether the taxes, you're going to have to pay on that property or whatnot. But you want to see what is the year that property was fabricated. And the reason why right now it's very important, there's dialogue in the insurance industry that pretty much what they're trying to emphasize on are coming together, these multiple insurance carriers, that if your property was built in, or the property you anticipate purchasing was built in 2001 or before 2001, they're most probably going to triple the insurance premiums within the next year or so. So that's somewhat of the dialogue, somewhat of what we as attorneys in the first party insurance having direct contact with sometimes even insurance agents when we reach out to these agents to get and review the insurance policy before, you know, to start processing the claim or to give our clients advice as to whether or not they could, you know, lawfully pursue this claim against your insurance carrier. We start, you know, we have that dialogue with the agent. Say, hey, listen, you know, you do this every day for a living. You know, what's going on? You know, what is that you guys are hearing from the carriers? And so that's somewhat what we've been hearing, or what they've been expressing when we've had those communications with them.
So a tripling of the premiums for a home built prior to 2001. And there's a lot of homes in Miami-Dade, a lot of luxury homes, a lot of homes in primary markets. It's on Miami Beach or Coral Gables or Pinecrest.
Coral Gables.
Yeah, throughout, that are prior to 2001. And so look, there's a premium on obviously newer homes already. One thing I've noticed is that I'm seeing within the city of Miami and the other cities in Miami, where the city of Coral Gables, the city of Pinecrest, that what they're trying to create now is they're trying to encourage people to tear down older homes to put up new ones. I know that there's an exception of some certain historic homes, but there's a lot of houses, for example, on Miami Beach, that if you want to go into a renovation, and we did this actually in a previous video where I interviewed my wife, who runs a large architectural interior design firm, that if you want to go and renovate a home, you can only put in 50% of the value of the home before they force you to tear it down. And that's simply because you know that if you've got a home and the value of the house is $500,000, there's no way you can spend $250,000 and totally remodel that home. So it's almost going to cause that effect of tearing it down. But there's a lot of homes on Miami Beach. There's a lot of homes built prior to 2001 on the water on Miami Beach and Key Biscayne and other areas where, if you're going to triple the premium, quite honestly, do you think that can almost make them unsellable? A premium, and you're talking, let's use a working example. Let's say you've got a $10 million house. You've got a really big home built prior to 2001. And that person right now for on the water insurance might be
I was saying north of $40,000.
North, let's say 50 grand. I think 50 grand. You're going to go from 50 grand to 150 grand just for your insurance.
That's what we're hearing. That's what the dialogue is. That's been my personal impression with these individuals. But going back to what you made a interesting comment though regarding tearing down if the property is 50%. That comment you made. If now with DERM, which they go hand in hand with the flood insurance policies. They have something to do, they have an impact on the federal level with flood insurance. If you're tearing down the property, you're doing more than 50% of renovation, let's say, for example, and they're most probably going to require in Dade County for you to level up your property. In other words, invest into the foundation and invest into the
the structure, the bottom, the rebar,
foundation, the foundation, to raise
the piles,
raise it for purposes of increasing the leveling of the property for purposes of flood.
Well, just say invest in it. Basically, what you mean is tear the house down, because there's no way to level up the home on an older home without tearing it down. There's no way to do that. The hand of God, lift the house up, put something underneath, drop it down. It's impossible. So when you get in that conversation, there's a lot of houses that I've noticed that people have come in and they said, you know what, it's an older home, and they've dropped hundreds of thousands of dollars into it. So there's inherent value in the property right now. The house right now isn't at land value. It's not a land value house. There are plenty of houses in, say, Coconut Grove. Coconut Grove, if you go to the left side of Main Highway, and the left side of Douglas, down towards the water, there's a number of homes that previously got affected by Hurricane Irma. And those right now, for insurance premium purposes, those already have a relatively high premium. But if it goes up, people who live in these aren't billionaires. These are $2.5, $3 million homes. These are working wealthy. There's a massive effect on what they can afford if you're going to raise, you take another $100,000 out of their pocket or whatever the number might be. So, and the houses aren't worth land value. But what you're saying at this moment, and I'm just extrapolating the conversation, it's possible that a number of these houses are fundamentally going to be viewed as just land value because no one's going to want to pay that kind of insurance premium. They're fine the way they are. They're not exactly a land value, but they're going to be viewed as such because the only way to make it insurable is by ripping the house out and building a brand new one.
Pretty much, knocking it down.
Wow. And there's a lot of houses like that. So, if you're watching this video, watching this podcast, and you have one of these homes, let's have a conversation.
So to touch on that. So what I believe is would happen is if you're in that working class division, or not a division, but let's say group of individuals, so that $2 to $3 million properties, they're most probably, if they get hit with that bill, they're most probably going to have to make a decision, either to reduce the size of the home and find another property to purchase because they don't want to. They're gonna what I'm trying to get to is no person or no property owner is going to want to dish out so much money into something that's not going to give you a return. Because what I'm trying to get to is homeowners and property owners are now seeing that this insurance contract that they sign off on and they pay a premium on, it's a one-sided deal, one-sided contract where they give, but they don't ever get a return when they need it. So why are they going to invest in something that's going to go up triple when they need when they need to have them have their back when a catastrophe like Ian comes by or some storm or something happens to that property, that they're going to have doubts as to whether or not that carrier is going to be even existent, or they're going to be filing for bankruptcy when when that disaster occurs, or number two, whether or not the claim's even going to get processed. So in other words, either if the claim's going to get paid, or it's the carrier is going to file for bankruptcy because they're not going to want to pay out all the premium. The claims for that area where that property is located, because either at a flood zone or whatnot. It has a higher probability of being impacted by storm surge or whatnot. So
storm surge is a real thing as well. When you look at storm, and I've seen houses where the storm surge come up, water's gone in the house, hits the drywall, sucks up like a sponge. Yeah. And then within a couple of weeks, you've got high levels of mold, and then you've got to remediate that. And you pretty much have to rip out all the drywall. And it takes, A, it's expensive, and B, it takes a very long time to do it.
Especially now with the prices of construction materials. So
well, there's a whole cascade of effects that are now running around in my head. I'm thinking about all the people who jumped on the investment market. An investment market, you've got a premium increase isn't just about, the long-term value of the home. It's a lot of the people who bought investment properties who are now going to look at this and go, there's no skin in the game now. I have no profit margins if my insurance premiums are going to go up this much, and I can't afford not to be insured, and I'm not even allowed to be insured, not be insured, because I didn't buy all cash. And we discussed this off camera, where most people who own homes have bought with a mortgage, whether directly or indirectly on the contract. Even the $20 million homes, they're leveraging their own money to borrow from the bank, but that means they still need insurance. This changing scenery that's around us kind of brings me into what's been happening this year. And I want to get into the conversation about how much money these guys are making, and really if there's a solution for you as a...
When you say these guys, you mean the insurance carriers?
Yeah, sorry, I clarify. I meant the insurance companies, the carriers, how much they're making. And it's not going to whether it's fair or not, but is there a solution for the end user? Now, when we get into the premiums, before we get into that conversation, I want to get into the conversation about what's happened, let's say in the last 12 months, with the California wildfires, because you mentioned something to me on the phone, how the premiums went up affected by them. Yeah. The effects of, and everybody wants to know, what was the effects of Hurricane Ian on the East Coast market from an insurance standpoint. Forget the West Coast. I understand we know what's there, but from an East Coast perspective, and moving forward, what is the impact? What's going to be the impact? And then we can also touch moving forward. What could happen if we do get hit, and what will happen then? So sorry, I know it's a lot to throw you with at once.
That's fine.
We'll go one step at a time.
That's fine. So recently there was a statement that was released by one of the carrier CEO that they have estimated damages in the East Coast as a result of Hurricane Ian. I think it was roughly north of $50 billion.
In the East Coast or the West Coast? You mean Sarasota?
West
okay.
Coast.
So, yeah, because I know Sanibel Island, Fort Myers, that whole area. Okay. Over 50. I heard 80 billion, but it's a huge number.
Yeah, yes. It's north of 50 billion. Yeah.
Okay. So 50 billion. Where does that money come from?
You mean to repair it?
Yeah, to pay out. Like, who's paying out that money?
So right now, what's happening with the insurance market is, I'm sure you've heard the carrier by the name of Siddons.
Yes, yeah.
Which, historically speaking, they were what's called the insurance of last resort. A Citizens CEO recently put a statement that says, as a result of the impact of Hurricane Ian, there's going to be a 20 to 30% increase in the premiums across the homeowners who use Citizens. So let me just try to break that down for you. Citizens, right now in the market, this insurance market, most homeowners have resort to Citizens because the premiums with in the private market have gone skyrocketed.
Yeah. So
what happens is that Citizens provides insurance to these homeowners, but when Citizens has to pay out, unrelated claims to these particular homeowners, it causes a domino effect. So in other words, if now this insurance carrier has to come in and pay out all these insureds in that area that was impacted by Ian, indirectly or directly, it's going to touch their pocket. It's going to touch the pocket of the homeowners who live in Miami, for example. They're going to see an increase in their insurance premiums once Citizens starts to process all the claims that have been put out in the West Coast as a result of Hurricane Ian.
Why is that? I mean, I kind of know, but I just want the mechanical explanation of why they need to take money out of our pocket. Just explain the kind of like, where's money going?
So Citizens is a state-funded insurance carrier.
Okay.
So in other words, it's the Florida legislature back in, I think it was August of 2002 created this this insurance company, quote unquote. So if this insurance company now has to pay out all these monies, north of $50 billion, $80 billion, whatever that that figure is, it's gonna touch the pockets of those homeowners or those insureds or property owners, that were not in the area and that were not affected by the Ian. So indirectly, they are going to feel their premiums increase as a result of Ian as well.
Because the insurance company needs to put money back in their pocket in order to exist.
Exactly.
Because if they don't have any money in their pocket. Now, $50 billion, that's a lot of money.
Yeah.
They have $50 billion to pay out? Like, Citizens, where's this money coming from?
So, just to be clear, the $50 billion is the more than $50 billion in property damage is what the experts are saying is the overall damage on the West Coast. From Citizens' standpoint, they're reporting losses in excess of $7 billion. Okay. So $50 billion.
So not the infrastructure, the streets, the roads, the dams, blah, blah, blah,
exactly.
But
so
the houses.
On the policies that they underwrite to their insureds, they're estimating it's going to be in excess of $7 billion that they're gonna incur in having to pay out these claims. Obviously, these are all estimates, but I mean, you're gonna have your claims that are gonna get denied. So not everybody's gonna be covered. The typical denial letter is that these damages were caused by prior wear and tear.
Prior wear and tear.
Yeah. So in other words, if your house got blown away by Hurricane Ian, there's a possibility that you're gonna come back and say, hey, by the way, there's prior wear and tear to your roof, but as a result of your roof blowing away, which caused the other elements of the property to blow away, we're not going to provide you with coverage.
So it's like saying, your car crashed into that wall, I'm not going to pay you insurance because your tires needed replacing.
Exactly.
Okay. But the crazy thing is, how do they even quantify that?
That's
open to a lot of nefarious activity.
So that's why we as attorneys, we have to litigate these claims. We have to retain what's called expert witnesses. We're going to say that this theory of prior wear and tear, can I say like BS? Or?
You can say whatever you like.
Okay.
This is my podcast, and this is unfiltered, and this is why we have these conversations.
Okay, I just want to make sure. Okay.
No, it's totally okay. It's not a PG. No kids are tuning in.
Yeah. So that's why we, as you know, in the insurance litigation standpoint, from litigating these cases, we have to retain expert witnesses. We're going to say, in essence, obviously in a more professional way, hey, by the way, what your field adjuster said that was caused by wear and tear is a bunch of baloney, bunch of BS. This is why we believe the coverage should be extended, because it's our expert opinions with a reasonable degree of engineering certainty that this hurricane caused damages to your property.
Should that cause concern for those people? Because, I mean, most people don't have a brand new roof, unless you've got a brand new house, and then you're probably not too concerned anyway because it's a concrete bunker. But for a lot of people out there, there are homes with 15-year-old roofs everywhere, 20-year-old roofs, 23-year-old roofs everywhere. So there's a very good chance that if something happens, they're going to have to start getting into a fight with the insurance company, because who has a less than perfect house? Everybody. There's always a way you can find a thing. And obviously when you're on the back foot and you've lost your home and you're trying to crawl through the mess and trying to fix things in your life, getting and fighting the insurance companies, how long does it take? It's not an overnight thing. It's not like,
it's it's obviously on a case-by-case basis, but on average, I would say more than 18 months.
So it's 18 months. So you're not going to see that money for more than, so those people who are in Sanibel and Fort Myers and all those areas, they're not going to see a dime for a year and a half.
I have cases from Hurricane Irma that are still in litigation.
Oh my God.
2017.
Wow.
Yep.
5 years ago.
Yep.
That's
so what happens is, listen, on the insurance defense background, the way, at the end of the day, this is all business. It's called insurance business. Okay. And most of the guys that are in business and part of the insurance don't know business. Part of the guys that are processing insurance in the insurance business don't know insurance. So what happens, you have, they have an in-house chaos where they retain all these field adjusters who come down here, for example, for Hurricane Ian, from all over the state, to start processing these claims. Let's get in and out, in and out, in and out.
Yeah, it's not a particularly fun job. And if you think about it, you're not going to get top of the food chain because you're crawling through what feels like a war zone.
Yep.
I mean, if you see the pictures on after Ian, you think to yourself, how is someone walking through what feels like a war zone where there's just rubble everywhere, and they're trying to figure out what should happen next, and how on earth you decide that the house wasn't, up to the standards when it's not even there anymore. It's just a pile of bricks. So,
it's that the comment you just made is one that we always have to face. And I'll give you an example. We've had cases with, let's say Hurricane Irma, where the insurance company renewed the policy 3 months before the hurricane hit. Okay, they literally gave you a new policy, renewed your policy, got your money. Okay, Hurricane Irma passes. Now they say, we cannot cover the damages to your roof because this is wear and tear. So if there was wear and tear, then why did you provide insurance coverage? Why did you make me pay you money to give me insurance for my roof? If you're going to claim if something happens, it's wear and tear.
Yeah, there's no logic.
Just take a second and just process that thought. I come to your house, I inspect your house. Okay, I'm going to give you a policy of insurance. Okay, 3 months, 6 months pass by. You make a claim for the Hurricane Irma, for example. I'm going to say, the insurance company say, it's wear and tear. You had prior wear and tear, and we cannot say that this was 100% caused by Hurricane Irma. So we're going to deny your claim. And I just renewed it. And the second best story is, why'd you wait 6 months to report the claim that happened as a result of Hurricane Irma? Why'd you take such a long time to contact us to process this claim? So typically, your typical consumer thinks that if you make an insurance claim, that your insurance premiums are going to go up. I think that's what, at least in Dade County, from my conversations from the people from Miami-Dade County, have told me, hey, listen, we try to do self repairs, have our GCs come on board, try to do everything we can to do the repairs, because I know if I put a claim, my insurance is going to skyrocket. So what happens is that they try to do self-mitigation, which by law you have an obligation to mitigate your damages, right? You don't want to just sit down and do nothing about it. So when you do that, and then they're still processing the claim, then they say that they were prejudiced, that the insurance company was prejudiced, but because they couldn't determine the cause of the loss because you made repairs. That's another avenue.
There's a lot of minefields in this process that as a consumer. So with all this going on, and then so you've got the effects of Ian, you've got still the lingering effects insurance for Irma. You've got the wildfires in California that created a raise in premiums, and the raise in premiums next year that we're going to see is going to change the real estate landscape of how people view when they're going to buy a property, because now they're weighing in a different set of rules and calculations.
I would say buy and sell properties.
But okay, so expand it on the sell, because what we want to do is we want to give good advice to buyers and sellers here and help them understand really what are your options and what course you should take.
So I'm sure you guys are aware. I mean, it's a in the news media in the last 6 to 7 months, all you hear is insurance crisis in Florida, special sessions with the governor, all that stuff, right? So what happens is that your typical, property owner, whether it's an entity, an investor, or people who own property, they're either dependent, they make their living off rentals, or they just buy, they want to buy a house or just live in properties. What do? They go in and contact their insurance agent, say, hey, what's going on? Why am I hearing this on the TV? What's going to happen? Is this true? What is your take? Tell me, as your insurance agent, what is your take? What are you hearing? What are you seeing? What are your claims? What are your quotes looking like? And so the feedback that we get as the attorneys, the reason why we get these feedbacks is sometimes they'll receive a letter from the insurance carrier. Hey, we're not going to renew your policy anymore because you made a claim.
I've heard a number of people saying there's a number of houses where they've gone to different insurance carriers and they said, we won't insure you. Yep. And so then they're locked into one insurance company with a very high premium. The premise behind that, I just don't want your money, is just because they view it as just a high risk.
It's
just too much
as a liability.
Yeah. The chance of, them making money from you is statistically less probable than them paying you out. So you can see that.
Again, it's a business. Remember that. It's an insurance business.
And I think that's, guys, watch this, understand this is a business. It's not, there's no charity here. And unfortunately, you've got to really be aware and come into this with full open eyes. Because I think a lot of people have this sense of fair play when it comes to, I'm going to hire an insurance company, I'm going to have them insure my home, and if anything happens, I can rest assured because I've got insurance. But it's more than that. Yeah. They're saying there's more than that. The housing is...
I'm going to give you a scenario.
Yeah, please.
We had a case recently, in the last year or so. It was an elderly woman, normal house, nothing out of this world. Her, some storm passed by, some tropical storm. There was a roof leak from the house. Her husband was sent to the hospital, elderly gentleman. So she couldn't report the claim on time. I mean, not on time, but within a week of the roof leak. Okay. She then waits. She waits about, I will say, approximately 2-3 months while the whole thing is going on with her husband. Obviously, the husband is the man of the house. He's the one that supposedly is the one that, based on what she's emphasized, the one that takes care of that kind of stuff in the house. So she's alone. Elderly woman, elderly husband. She reports a claim. I think it was like 1 month or 3 months after the loss happened, the claim happened. They say, hey, we're going to deny your claim because you waited a month or 3 months. We don't care your circumstances. In other words, screw what's going on with your personal life and with your husband that's pretty much dying. Okay, we're going to deny you. And guess what? We're going to non-renew your policy the next term. So now that you have a non-renewal, now with the next term, policy term, you're not going to have insurance. You have an open claim, and most likely than not, another insurance carrier is not gonna.
Does that happen when people lag as well? I'm also thinking about that effect of when people don't insure and they let their insurance, lag.
Yeah, renew by itself.
And then they go, oh, you know what? Maybe I should get insurance, and they do try to go back, and there's a gap.
I would say it could happen.
Okay,
it's possible.
We've touched on a lot of this conversation has obviously gone around the single family market. I want to touch on the condo market as well. Before I do that, I want to ask one question, which is about what we call dry lot and waterfront living, because there's a conversation that I have with people moving over, especially with a lot of the relocations, and they weigh up and they say, Okay, waterfront house. I love being on the water. It's beautiful. I get a great view. I get the whole lifestyle.
When you say waterfront, you mean on the condo or?
No, I'm talking about single family.
Okay,
single family home right now. So single family home, got a choice: be on the water or be on the dry side. And with the premiums, with the flood, and I know with insurance, there's multiple facets to the insurance. And just to be clear, so you've got flood insurance. Take us through the aspects.
Yeah, so your typical policy is flood insurance, homeowners insurance.
Okay. And homeowners insurance is going to cover you for, like, you've got wind, fire, flood, sometimes even theft and vandalism. Okay. And then you got contents insurance. You've got your roof insurance. So there's different pieces of the insurance policy.
Yes. Different elements, different coverages.
Different coverages. Yeah. So when you have, for example, you have your 8-point. Your 8-point is when we sell houses, we will go through a home with a buyer and we'll say, okay, we're going to get an 8-point inspection here, and we're going to check the doors and the windows, make sure they have all the stamps, the roof, make sure the straps around the rafters are all in accordingly, like double strap. Trusses. There's a whole trusses. That's the word I was looking for. There's a lot of technicalities that, even though we're realtors and we sell real estate, we have to understand what the people are looking for, because there's a cost involved. If you don't have a double wrapped strap, wrapped beam, it's very different to single strap that can come undone and take the roof off. Or I don't have hurricane-proof windows. I've just got normal windows, and there's different grades of hurricane-proof windows as well. So that whole plays into then the policy. And we think, maybe it's a little bit different. It can be a big difference. So when you're weighing up that house and you're factoring in, okay, an older home and I've got to do X, Y, and Z, or a newer home, there is a lot of savings by having that newer home as well.
Correct.
When we get into this dry lot waterfront conversation, the dry lot homes, because let's say you're out of the flood zone. Mm-hmm. So the appeal of buying out of the flood zone. Right now, there's obviously a desirability to be not requiring flood insurance because you're not in the flood zone. Right. How different could that become a year from now? I know this is a loaded question, but
on a premium
basis? on a premium basis.
I mean, it could be significantly. Talk about, you want to be on a conservative side, you're talking about a $20,000 to $75,000 gap in premium. In an additional cost of having that property in a flood zone versus a non-flood zone.
Based off what the value of? Give me a value of a house.
Value of the house.
Yeah, let's say you got a $5 million house and $5 million house.
The value of the house and how close you are into the intercoastal.
Okay, so if you're in the flood zone to a dry lot, let's say you got a $5 million house that's in the flood zone. You have a $5 million house out of the flood zone. What kind of difference of the premiums are you expecting to go up in the
it all depends on what is exactly your, obviously if it's the difference between whether it's going to be a cash transaction versus you're getting
let's say it's mortgage. Let's say you need insurance. Okay. Is it?
I mean, from my understanding, and every lender is different, but they pretty much all go by the same criteria based on their lending requirements. But you're looking at, again, a $20,000 to $50,000 give or take difference, even north of $50,000 difference in the difference in premium, increase in premium.
And you say, and you're seeing an increase from where we are today in November to, say, if we were hypothetically transported forward in our DeLorean to 2023 November, there's going to be a difference between what exists today as a difference and what it will exist a year from now.
Correct.
So the appeal of dry lot homes can increase more than they are right now because of that. Correct. It's another factor. Yep. So again, bearing in mind, there are, there's a desire to live on the water. There's a cost that comes with being on the water, whether it's a maintenance cost, it's an insurance cost. And that's still going to have, I think we still have these high-level buyers who right now, if you look at the desire and the appetite for waterfront homes across Miami-Dade and into Broward, and we sell a lot actually in Fort Lauderdale, which has 320 navigable miles of waterway, so it's a waterfront city. That market, this is an interesting conversation for anybody who's factoring that decision. But there are buyers who still want that water, who will still take the water, and that's why we're increasingly seeing a much higher level of new homes that's what people want. They're looking on the water for new homes or newish, couple of years old, say, homes, because the the way that the protection, the seawall. My wife built a house on Venetian Islands the seawall was like 15 feet higher than the neighboring seawall. It looked crazy. It looked like a castle. But they did that so that the city policies were to code for many years to come. And the city obviously is changing the code from how high the seawall is. We've noticed that over the years, over the last 20 years. And we sell a lot of waterfront homes across Miami and Broward. As I said, we're luxury specialists, so waterfront houses is a big part of our business.
You're going to see a lot of that, and I'm sure you drive down by like Gables by the Sea, that area down
Of course,
south.
Gables by the Sea, Gables Estates, Old Cutler Bay.
You'll see a lot of new construction going on because of that.
Huge amounts. Huge. Everybody's coming in and buying. They're looking for the new homes, and that's why those new homes are carrying a premium.
And if you notice, some of them are even doing like the Florida Keys style, where they have is on I don't know,
stilts.
I don't know if it's stilts, but they're they have like kind of like a basement area where the pool's at, and they build on top of
that.
There's
like a plinth.
Yeah,
and that kind of segues into the condo conversation, because we've noticed that with the new condos as well. The new condos, the way they're structuring them and building them, I always reflect on. For example, there's a building that's very close to my heart in Coconut Grove called Park Grove. Park Grove is built on a 50-foot plinth. You literally look at it, and it's raised up 50 feet. With a wall around it, and it wasn't like that before. The building before wasn't anything like that. We're increasingly seeing these buildings built up, and the way that they've designed them for functionality purposes and for insurance purposes is obviously changing, because
I would say the big ticket item is the insurance purposes.
Well, the funny thing that that we can have this conversation, and it's part of the tragedy that we've experienced over the last couple of years, is when we had the Chaplin Tower collapse, the conversation was a lot of that corrosion was because of the columns that were underneath the building, and obviously salt water and seawater, and the environment is more aggressive on the beach. Right. The wind and the salt and the sea.
Yeah, you have a bunch of different elements coming together.
More corrosive elements coming at play. And then obviously what you saw is that these older buildings, they're having to be, their HOAs are going up a lot because they have to continuously do this repair.
I could affirm that. I do also represent associations, HOAs and condo associations as a general counsel, and I do know that a lot of as a result of the Surfside collapse, a lot of them now after the tragedy, they immediately started calling for the reinspection, the 40-year reinspection and inspection of the seawalls if they're on the coastal line, as a result of what transpired that day.
Well, the actual the 40-year assessment that they would have, they've now introduced a 25-year assessment, which is again, it's putting that pressure on the homeowners associations to say, you better have enough money in the pot, because at the 25-year, you're going to have a big cost. There's a big maintenance bill coming.
There was even, I believe, there was a condo association where this tropical storm, I think it was Tropical Storm Nicole, struck on the East Coast, or it could have been even Hurricane Ian, but that the storm devastated, just took the seawall with it. The seawall had been an older seawall. Had not been risen, had not been maintained properly. Just took the entire seawall with it when it impacted that property. So again, it goes to, obviously there's changes that are transpiring. People want to become more secure as a result of these storms, but also on the insurance side of it.
Yeah, because we have, as you move up the Florida coastline, the East Coast, I get people calling me all the time, and they're like, I'd like a beachfront house in Miami. And I'm like, it's not Malibu. I mean, we have Altos Del Mar, which is a tiny little enclave on the actual ocean. And then if you go further up, you've got Golden Beach. But most of the homes obviously are sitting on the intercoastal. The condos, however, majority of them, the luxury ones, they're all sitting on beachfront. They're all sitting on the Miami Beach area or the Fort Lauderdale area. And those areas, if you look, and again, this is a conversation that this is something that we've learned over the years of doing this. We've sold properties from all the way down from the Keys all the way up to like Vero Beach. And Vero Beach is an accruing beach. It's a beach that actually grows. It gets wider and deeper, and it's actually the high points and Lighthouse Point of Vero Beach. You're actually talking about being 17, 18 feet above sea level on the top of these levels, which in South Florida, in Miami, it's like 3, 4, 5, 6 feet above sea level. So it's a huge difference. And the buildings, obviously, that we've got a lot of new buildings that have now come out of the ground. If I look from Sunny Isles down, Aquilina just opened, and you've got the Turnberry open, Ritz-Carlton opened 2 years ago. We've got all the new buildings coming, which are being built in a completely different manner, in a more advanced, more protected level. But there's a lot of older buildings too. There's a lot of buildings that you'll go into that are from the 90s. Early 2000s, of course, but some from the 90s and 80s.
Well, you want to keep in mind, when there's a tragedy or there's a state of an emergency, there's typically a reaction or something that causes something to change. For example, I'll give you a scenario. Hurricane Andrew. When Hurricane Andrew hit South Florida, it caused the Florida Building Code to change. My understanding is they, as a result of the devastation that wiped out pretty much South Florida, the Florida Building Code was, I believe it was either amended or it was not created, but it was meant to be more stringent on the impact windows on the properties, and what now they call is high velocity wind zones, which I believe is Miami-Dade, Broward, and Palm Beach. So they created these zones which requires, or they are trying to emphasize on these properties to install the hurricane impact windows as a result of the change in the code, and on the newer buildings, the new construction, requiring that to be the case, or requiring those impact windows to be installed in the doors. Yeah. So what I'm saying is, when there's tragedy, there's always like a domino effect. It causes things to change as well.
Well, it forces, and if you look at the hurricane doors and windows, even within the buildings, I'm seeing the structure of those. I'm not a structural engineer. Yeah. I'm surrounded by a lot of people who are structural engineers every day, and we kind of elevate our knowledge by being able to take clients out and say, look at that. The reason why I know this is my in-laws are structural engineers. So okay, perfect. They build high rises, so that's why I have that understanding of the code. So that's why. So that being the case, when you look at a door and a window, you're just not looking at, even if it's a hurricane-proof door and window, there's a difference between how some of these buildings are built. It's like buying a car. You can buy a brand new. I always use this example, so I'm sure Honda probably by now would be like, who's this guy keeps criticizing Honda Civics? Brand new Honda Civic, nothing wrong with it, great car, but it's not a Porsche. Yep. And again, the two differences. But even if it's a Porsche,
you get an old 911 and you compare it to a new 911, huge difference.
Huge.
On the tires,
the point is
aerodynamics and everything.
I think that the takeaway is that there's a lot of different products in South Florida, but it's not insured all the same way. It's not all insurable the same way. It's not going to be protected against the environment in the same way. And even though it might be new has variances within the insurability of that new product, whether it's a house or a condo. And location obviously is very, very key, and you need to understand the topography. And we spend a lot of time having conversations, educated conversations with existing clients who live maybe closer to the water, might have a new home, might have an older home, and those who are in, focused on the dry lot areas. But I think it's great to have this dialogue with you, because I think people don't spend as much attention looking at this or talking about this as they should. They just let it go over them and say, well, it's insurance. It is what it is.
Let's have that conversation a year from now and see if that's just going to be just what it is.
Well, we'll watch this space, and maybe we should have this podcast again a year from now, which, this is probably one of the darker podcasts I've had to do. Usually it is a lot more kind of, hey, this is all great. I think the truth is that being kumbaya and everything is awesome, as the Lego movie says, is not reality. I think everyone can be, obviously, in a certain industry, in real estate, very sycophantic. It's all great. This is great. That's great. Yep. Buy this, buy that, buy anything. As long as you buy it, I'm cool and I get commission. I spend more time telling people not to buy stuff than I do telling them to buy stuff, because I'm playing a game of chess, not checkers. It's a long-term play where I want to protect my client's interests and have them as my client for 20 years. They don't sell them a house and then 3 years they're like, God damn it, that guy sold me this house and now I can't get insurance.
That makes a huge difference, let me tell you.
It's a big difference in how you come at the business or any business. And so as we look forward into the future, sooner or later, it's not a matter of if, it's a matter of when. When we look at the insurance business as it is today and as it is next year, it's going to be different. As we look at what would happen if a storm did hit us, what is your... And
again, this applies both to property owners and also those who are coming into the state to develop and invest in.
Yes, because developers do. We have conversations with, and we work with developers as well, whether we're consultants to developers building condos or whether we are working with developers of new homes, and we have several that we work with who are building homes right now in South Florida, luxury homes. I'm not talking about, $500,000 homes. I'm talking about $10, $20 million, $30 million homes. The advice to give to them, just a bit of a takeaway, bit of information. What would you say to pay attention to moving forward? And if we were to hit, what's the best way to protect yourself? Like, you sit in front of someone right now and they say,
from the policy you're about to sign off
on,
a potential catastrophic event like another hurricane.
Well, there's two ways to do it. There's my job is to protect them and say, okay, do buy this, don't buy this. Or if you buy this, what are you going to be aware of the risk? What would you say to those people right now who are looking to buy? And if they're looking to sell, they're then looking to subsequently buy it. What do you say those to the buyers out there who are looking? What should they be paying attention to?
Okay. So that's a twofold question. So typically buyers we're in that 10 to 20 million.
Let's use that as an example.
Okay.
Oh yeah, let's do 5 to 10 because there's more meat in that.
It's been my experience that typically a buyer who's buying that kind of property, that valuation of property typically has their own representation when they're going to buy this property. In my experience, I typically have an attorney that's probably the attorney probably even does title.
Always. We always have title.
Typically. So what I would say is when you guys start getting those quotes for that property, okay, make sure you know what your exclusions are. What is being excluded from that property? If it's water exclusions, are there caps on the water damages? What are your caps? What are your exclusions on that policy that you're going to potentially obtain on that property? And the second thing is, what is the certificate of occupancy of that property? In other words, what is the age of that home? That would be my response. And then make sure that your insurance agent is able to properly obtain these quotes for you, and just does not just want to get a commission and just bring another client down through his office. Make sure you sit down with your insurance agent or sit down with your attorney. And hopefully, typically, insurance and real estate come together. That's why we're having this conversation, and make sure have somebody who has the knowledge of reviewing either an insurance policy or a quote which ties in with the policy, explain to you or the company or whoever is running, whoever is the buyer, what is being covered in this quote of the.
And that would mean looking also at the when we do the inspections of the homes.
Correct.
Share that with the person that you're dealing with and say, okay, am I likely to suddenly, as you said at the beginning of the conversation, get an insurance carrier who might turn around and say, you know what, your roof's 22 years old. There's I get it all the time. There's a little leak here, but we can fix that and it's fine. And the roof's good for another 5 years. That's not necessarily the problem.
Not anymore. So that's not the problem. The problem is, what is it that's being covered? What exclusions? And so just to backtrack, what is that's being covered? The caps and the coverages. Okay, what are the caps and what are the exclusions? And making sure when that property was built. I think that's the main two focus areas. And understanding what policy you're getting, understanding what you're paying for.
Yeah,
you could be paying top dollar for something that pretty much leaves you naked in the event of a storm.
Yeah. And maybe for the condo owners out there, factor in the age of the building that you're potentially getting into, the HOA fees as they are today, but where they could go, because there is an assessment coming with a lot of HOAs where that number's going to change.
Yep.
So I always say to my clients, we get you the minutes from the building, we get you the disclosed and the undisclosed, because if there's a conversation that's being had about an HOA change, you need to be made aware of that. You need to be aware of that.
And when was the last time there was an inspection done to comply with the...
That's a good one.
And make sure also that the condo association, what is it that they're holding and on a funds side?
The reserves.
The reserves, yeah.
Yeah.
That's where I was looking. What is it, the reserves that they have?
Yeah, you don't want them running out of money. So I got to tell you, Hugo, this is great. Thank you for doing this. As always, look, if you want more granular information on this business, Hugo Garcia will put his information here at the bottom of the screen. As always, we're here to help you make a better decision.
Correct.
The market is more than just going out and show you a pretty home or a pretty condo. This is more about giving you some of the unknowns that you're going to be dealing with now or in the future. Thank you for watching, Hugo. Thank you so much.
Thank you for having us.
And stay tuned for another episode of the Better Decisions podcast.